We're back to $100 oil, and I'm interested from your perspective as to whether the price signal is strong enough now that perhaps you do ramp up on more production than you had envisaged.
Well, Caroline, it's good to be with you, and we did have a good investor day today where we laid out a plan at much lower prices than we see today to return more cash to shareholders. We increased our share buyback guidance and indicated that we expect shareholder distributions to be 50% higher than they were last year. So even in a much lower price environment, our company is strong and getting stronger. The current market situation is unfortunately one that we've seen before, where our industry goes through cycles. We've been in a period of time where prices have been very low because demand has been depressed during the pandemic, and then demand has recovered very quickly as the economy has recovered. And in a commodity market like oil and gas, demand can move much faster than supply in both directions, which has created outsized moves to the downside in 2020. And here we are in 2022, seeing the reverse of that. Our company's actually spending more this year than we did last year. We've increased our capital spending nearly 30%. We will increase production in the Permian Basin here in the U.S. by more than 10%.
Mike, sorry to interrupt. Can we talk about that supply side? Because I know that it is lagged when you get a rebound in demand. But are you surprised that there's an administration who's talked about OPEC Plus increasing supply to help lower prices, but won't engage with U.S. producers? Devon Energy had mentioned something similar yesterday, saying that he was a little bit mystified that the administration hadn't reached out to see what could be done with lower prices. What would it take for you to step in and help increase supply? Do you want to hear from the administration?
Well, we would like to be engaged with the administration. I think when they first came into office, they had a whole host of priorities with the pandemic, the economy, some legislative priorities, and engagement with our industry was really not one of their priorities. So we didn't hear a lot in the early days. Clearly, things have now changed, and I think there has been some more contact, and I would expect more in the future. As I was beginning to say, Taylor, we actually have increased our spending. We've been very disciplined with capital, but we're up 30%. Production will grow in the U.S. this year. So we're responding to these signals, and other companies in the industry are as well. There's no physical shortage of oil supply. There is anxiety in the markets at the prospect of an outage, and that tells us that, or of tightness, but it tells us the market is much more finely balanced than it has been in the past because these tensions have created some price anxiety. But markets are supplied right now, and there is not a shortage of oil.
There is not a shortage of oil here. There is still concern, though, about the longer-term ramifications of the war in Ukraine, particularly if it escalates here. Has the White House approached Chevron at all about doing more?
Well, we engage in conversations with all levels of the administration. We keep those really, for the most part, private because, we want to respect the nature of those discussions. But we've shared our ideas on how markets can be calmed, on what can be done if there were to be actual shortages that would begin to materialize in either oil or gas. And so I would say there are channels of communication that are open to deal with the short-term issues. I think the real opportunity is for us to have a more balanced and pragmatic conversation about what a good energy policy looks like in the medium and longer term to balance economic, energy security, and environmental priorities in a way that reflects the realities of each.
Energy security comes top of mind when we think of Europe right now, Mike, and I know that you, of course, are key in gas distribution to Europe. Are you looking to quicken that in any way? Has that been something you've been discussing with European leaders?
Well, most gas, liquefied natural gas, which is really the alternative to the Russian pipe gas that comes into Europe, is predominantly sold on long-term contracts to customers who agree to those terms just for circumstances like this. They want to be sure they have supplies if there were to be any concerns about reliable supply. So the amount of gas that can be redirected in the short term is much smaller than the amount that's contracted in the long term. We have shared some discussions with various governments on what can be done in the short term in order to respond to any potential tightness. But in reality, those options are somewhat limited by the nature of these markets.
Can you comment on any pressure to divest assets? Some of the peers have come out strongly, divested assets that they have in connection with Russia, or at least that region. Do you have an update for that?
We have much less exposure to Russia than some of the other companies that you've reported on. We don't produce oil or gas in Russia. Our only real exposure is as part of an international consortium that has a ownership of a piece of pipe that connects Kazakhstan with the Black Sea. So it's an infrastructure position, but we're not a producer of oil and gas in Russia. So I think the real issues have been with some of the other players in our industry that have bigger positions there.
All right, well, let's go back to the shift to renewable energy sources, something that was in progress, at least an attempt here by the major nations in the U.S. and Europe to do this prior to the situation in Ukraine. We now know that some nations in Europe have decided they want to accelerate that process, and you have a president here in the United States who has, of course, also shown eagerness to do that. Has there been at all any discussion, a change in the calculus as to how soon we get to that quote-unquote green future?
Well, the reality is the world uses an enormous amount of energy today, 80% of which comes from oil, gas, and coal. That number, the absolute demand will grow significantly in the coming years. And even as renewables, wind, solar, other forms of renewables grow, demand grows as well. And the mix will change only slowly. We need to have a conversation about how do we ensure affordable and reliable supplies that can support economies, that consumers can plan for and can tolerate, and at the same time make progress on a lower carbon future. We're very committed to a lower carbon future. Others in our industry are. And just yesterday, we made an announcement of a major acquisition, a multi-billion-dollar acquisition of the U.S.'s leading renewable fuels company. We want to create a platform to grow renewable diesel, biodiesel, sustainable aviation fuel as a bigger portion of the energy mix here in the U.S. We're also investing in hydrogen, carbon capture and storage. So we need to have a conversation about how do we meet the energy needs of the world today and at the same time deliver on the lower carbon aspirations of the world for the future. And that's a discussion that we welcome.